What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Zoom Video Communications, ticker symbol ZM. They just reported their Q1 earnings after the bell just moments ago. So we're going to go through them. We're going to take a look at the revenue, the profit, what they're doing on their balance sheet, their cash flows, all those types of things. When we get over this financials, I'll help you walk through all those numbers so you get a really good understanding of what's going on with this company, at least on a quarterly basis. We'll also take a look at the guidance as well. Take a look at second quarter, compare that to the most recent quarter, those types of things. And then we'll get over the stock chart as well on this one. This one has been channeling downward, okay, after being one of the darlings and one of the best performing stocks of last year. I mean, this stock was like $100 and it went way over like $500 and it has pulled back. So we'll talk broadly, okay, if you happen to buy Zoom at a higher price, we'll talk broadly how these types of stocks that get a really nice story, but then the story changes, okay? Zoom had a great story last year. The stay-at-home worker, the move away from the office. While that trend is still not going away, the story has changed. And so we'll talk about how you need to keep that in mind when you're an investor. Now, I think the other thing that we should talk about too is what's next for Zoom. Okay, obviously the pandemic, I don't want to say it's over, but things have certainly gotten better, thank goodness, and it could change Zoom's business, and it definitely can slow down their growth rate, which we'll see here in a minute when we look at the financials. I think we're definitely seeing at least a steadying of their growth rate, and their exponential growth days might be over. So what's next for Zoom? They're launching these Zoom events, which is kind of interesting. I've been to conferences before where you obviously you buy a ticket, you get a pass, you show up in Las Vegas or wherever the conference is, you go to these live events. But some of the most valuable things of in-person conferences is you get to recordings of all these other events that happened during the time that the conferences was going on that you may have been maybe at the casino or at the pool or something like that. You didn't happen to catch it. So it could be that Zoom carves out a niche in a market for that. And I think events, live events especially, will be huge over the next few years. Okay, as people are still working from home, they're going to use Zoom, but businesses are going to put bigger emphasis on in-person events. And so those conferences, those types of things, I think you're going to see those be wildly popular. And if Zoom can capitalize on that, I think that's an interesting business model for them. Now, moving on to more of the specifics that we see in Q1. So revenue came in at $956 million. They're still just blowing it out in terms of comps over last year. I think later in the year, Q2, Q3, Q4, we'll see some tough comps for Zoom Video. It might be tough to kind of spin those numbers as positive when they're not growing at exponential rates like we still see. Growing 191% year over year could be the last time you see that type of growth with Zoom. Now, free cash flow, we'll get into this. This is a company that's printing cash. They have operating profits. This is all really good, okay, in my opinion. Now, the other thing that we want to take a look at is second quarter guidance. So they're guiding between $985 and $990 million. So I just want to keep in mind that we just printed a quarter of $956 million. So you're seeing that the growth rate is starting to slow down a little bit. Okay, we're going from 956 up to 990 probably and some change because these companies tend to come in under where they want to be on terms of guidance. Now for the full year, they're guiding between 3.9 and 3.9. We'll just round that all the way up to $4 billion. That is showing you they're basically guiding the next two quarters to be in this $1 billion range, right? Because if you're going to do $1 billion in a year, that is 4 quarters. That is about $1 billion in each quarter. That's about what Zoom is guiding for. And I think that could have some investors disappointed, or at least in the shorter term. Now, the other thing to keep in mind is they are guiding non-GAAP income between 1.4 and we'll call that almost $1.5 billion. That gives us a valuation. We're sitting at about a $97 billion valuation on this one. That's about almost 90 times forward earnings on this one. So still from a price to earnings basis, traditional price to even sales basis, this is a company that is massively, massively valued. So if they want to turn this stock price around, they've got to convince investors that that valuation makes sense or they'll grow into it. And when you start slowing from a 956 to a 990 million quarter over quarter, well, your growth rate is somewhat stalling. Now, might not be a negative thing. Let's take a look at the balance sheet here. Zoom kicks it off with the balance sheet, so that's what we'll do. And I tell you what, it's crystal clean. I'd lead it off with this too. This is like your Tinder profile. You want to put your best, but you wouldn't put your worst picture up on the front page. You'd put your best picture on the front, okay? And that's what Zoom Video is doing here, okay? They've got $4.6 billion in cash. They've got another $366 million in receivables. All things being considered, everything looking absolutely fantastic from the asset side of the business. And when you take a look at the liabilities, it just reminds me of some of the great tech companies out there, okay? They've got in total liabilities, everything included, all the things that they've got going on liability-wise, $1.7 billion. They have about that sitting just in cash and cash equivalents, not counting their marketable securities or their accounts receivable. So this is a company, from a financial perspective, is in good a shape as anyone, okay? And so that should, if you have Zoom shares, you should take comfort in that. Now, obviously, investors don't care too much about the balance sheet. What they care about is the statement of operations, the revenue growth, the profit. So let's take a look at that. Revenue here, we grew, obviously, just fantastic revenue growth. We went from 328 up to 956. The cost of revenue, so this is like huge growth here. The cost of revenue barely grew. This is just your traditional kind of high gross margin software company. You got your gross profit off of $956 million. They grow $691 million. This is why companies people wonder why, look, there was a lot of reasons why Zoom Video soared last year, okay? But we didn't see a Cisco, which has a WebEx product, and a couple other companies that have products similar to Zoom. We didn't necessarily see them spike up like this. Well, they probably don't have this kind of gross profit where you do $956 million and you gross out $691. This gives you tons and tons of leeway to do a lot of R&D, to do selling and marketing, and to do some G&A stuff, which, you can debate whether or not that prints a lot of money to the bottom line or not. Now, so our total operating expenses, after we add up research and development, selling and marketing, and general administrative, came in at $464 million. So you take this 691 minus 464, and hey, look at this. Look at this income from operation. $226 million. This is why they're guiding to a non-GAAP, but even from a GAAP perspective, generally accepted accounting principles, times this number by 4, and you're getting pretty darn close to $1 billion in income from operations. You gotta love to see that, okay? And even when you come down here to the net income side, they're printing a ton of money down here from a GAAP basis. This includes share-based compensation, which is non-cash. It also includes appreciation, amortization, those types of things, which is also non-cash. Look, last year we're sitting at $27 million. It's grown 10x to $227 million on that net income side. You earned 74 cents per share. Last year, you only earned 9 cents per share. They're not diluting you that much, and particularly probably because this balance sheet is super healthy. This company doesn't really need cash, okay? Because they are profitable. I would expect Q2 to look similar to this. Like we said, they're going to print this 985 to 990 number up here. That's another 30 or 40 million. My guess is you'll probably print another 5 to 6 million, maybe even a little bit more than that, maybe even closer to $10 million down here on this net income side. So they're going to print another $200 million to the net income side, another 74 cents to the shareholders. This is very, very good. Now, are we still overvalued at $97 billion? Probably. Are we still overvalued from a price to earnings basis? Probably. Okay. But what's Zoom's next move? That's why I talked about how they're, launching into events. Maybe they make another move. Maybe they acquire other software brands. Maybe they roll things up into a tighter product. I don't know. Maybe they become like a second version of Salesforce.com, which is basically just rolled up a bunch of software companies. That would be interesting. Okay. So that's kind of what I'm looking for with Zoom. I think their main product is fantastic. fantastic. They obviously are wildly profitable with it, not only from a gross perspective, an operating perspective, but also a net perspective. Everything looks really good. Okay, from a cash flow perspective, which is where we're at here, it is fantastic. We pull down that really nice net income number, which again is like tenfold over where we were last year, and take a look at cash flows. We basically doubled them from 258 up to 533. So we're printing $533 million in a quarter when they're doing $956 million worth of revenue. So this is a business that just prints cash. So when we get over to the stock chart, which we'll do now, as this thing goes down and down and down, should get you more excited, honestly, unless obviously you bought up in here at $300 or $400 or $500 per share. So let's talk about this. So if you happen to buy Zoom at a much higher price, which in my opinion right now would be anywhere north of $380, you're pretty deep underwater on this one, especially if you're over $400. $320 stock price seems, miles away from $400 or $500 per share. This is the kind of thing that you need to think about. Okay, when you bought these shares, the story on Zoom was that everybody was going to be working from home. Everybody was going to work from Zoom. There was not a lot of clarity, especially when we were at these highs, October, November. We still weren't sure what the course of the virus was going to take. Now, the story changed. And so in my opinion, when stories change on stocks, you need to get out of them. You need to sell. Maybe not your entire position, but you need to lock in some profits on some names like this when the story starts to change. Because the story started to change on this one. And as we've seen, I drew these two, kind of horizontal lines here showing you that we are in a downward trend. And until we break above it on significant volume and significant momentum, I would expect this downward momentum continue. Okay, just from a technical perspective, it looks like we'll see some support down here at about $240 per share. Again, if you bought it at a higher price, that's probably not going to mean a whole lot to you, but you got some support down here at 260, 240. That's personally where I would think about stepping in on this one. So I like what we've got going on with Zoom. From a technical perspective, this chart looks like a disaster. It looks like we're going to hit our head here and continue to go lower. Now, on the bull, to give you guys some hope, you break above, I think you're looking for a break above 380. So you're looking for some significant momentum on this one. Okay, you want to take out these highs, which it looks like we're trying to do, but there's significant resistance here at 340 on this stock, 340, 330, which is about where it's at. It's about 325 as we're recording these videos. You got to get above that, and that's why I have marked out 380. Okay, you got to get above 380, and then maybe we can start taking out these highs. But a lot of all these candlesticks are people up here. Okay, and they're people that are way underwater on this stock. As this stock starts to walk back, they say, oh, great, I can sell my Zoom shares and get my money back, okay? Because right now they're looking at a big-time loss in either their E-Trade, their Schwab, or their Robinhood account, or whatever they have these things. They're looking at a big-time loss on these things. So I actually would expect this stock to continue to trend down. Where I would step in on it, I think it kind of depends, but I do like these financials. I do like the look of this business from a fundamental perspective. This is a beautiful business. They're not going to have explosive revenue growth, but they have lots of cash. They can buy other businesses. They can roll up other technologies. They can invest in their technologies that they have now, but they're going to make lots and lots of money off this software in the meantime. So I like that from a perspective from fundamentals, but when you talk about valuation, it doesn't make a lot of sense yet because you still got an extraordinarily high PE, and our best growth days are likely over, at least organic growth. Maybe you see some growth in terms of acquisition as well. And the market cap at $97 billion, again, doesn't make a lot of sense, at least at the current time. So I like Zoom videos in some ways, and I don't like it in other ways. And then from a technical perspective, it's completely broken down. I'd wait for this one to pull back further, but you get a deeper pullback in this one. And maybe let's just throw some numbers off the top of my head. You can get this one 30, 40 times, which again is about half off where the stock is right now. If you happen to get that type of momentum downward on this stock, could be an interesting buy at that point. I'd also want to look for other ways that Zoom is going to make money in the future, because I think that they're going to have to continue to develop more ways to monetize this business. Hopefully, you guys enjoyed this video. We'll be back again with more this week. Good luck with your investments.